we were in upward momentum. If you take a look at momentum, momentum was with us. We had a high here, a daily high already established. I was waiting for it to go through the high. We finally did go through the high. My entry point was really at the high, but we bypassed the high. And with the new bar, we continued up in the momentum with the market going the direction that I thought it was going to go. That was my confirmation.
Okay.
And I entered. When I started taking profits, my go-to profit margin is around $1.10, $1.20, right? In this case, I made $1.40, right?
Mm-hmm.
On the first 35 contracts. Okay. The second one is we started at 941, right?
Mm-hmm.
We came up, and then we started to stall. We took another 10 off. By the time I was able to execute that trade, it was only 20 cents more than what I executed prior to that. Okay, on 35.
Mm-hmm.
But that's okay because that put another $1.60 a contract in my pocket, and so I made $1,600.
Okay.
4,900 on the first exit, 1,600 on the second exit. It continued in the direction. This was just a bull flag forming,
Mm-hmm.
right? And so I was waiting because I already had profit, I was waiting for the continuation.
Okay.
So I took two more off at 1950, which gave me a $5.90 profit per contract.
Okay.
So it gave me another $1,180. And then the reason why I went flat is because it went through the 3 quite hard.
Mm-hmm.
And I said, well, that's it. Right?
Yeah.
It's reverse. Look at this candle right here. This candle is basically a shooting star.
Mm-hmm.
Here,
Yeah.
right?
Mm-hmm.
And so I said, well, shooting star, time to get out. I made $2.60 on 3 contracts, giving me a total of $8,460 in my pocket.
Okay. Well, so
does that make sense to you?
Yeah. So just to confirm, it was going to the daily high that was your push, right? The push
Correct.
gap. Yes.
Correct. It was going through the daily high. We had upward momentum. If you take a look at the momentum, I know you don't have the indicators yet.
Yeah. Mm-hmm.
But we had momentum confirming. The ticks never turned red. Mm-hmm. They were always green, right? So that's another confirmation. If you take a look over at our DMI, our super DMI,
mm-hmm.
the directional market indicator, it was also going up.
Okay,
and getting stronger. Now we'd like to see it above 25, but it was getting stronger, and the DMI was still fairly strong. You see green line over here on the 5-minute chart,
Yeah.
it was still green and going up when I entered.
Okay.
Okay?
Okay.
You take a look at the 5-minute momentum, which is the best predictor of future movement. It continued its path up and above the 0 line. So I had every indication that it was going to continue up. I also looked at the S&P 500 hourly, the Dow Jones hourly, the NASDAQ hourly, and the Russell hourly,
Okay.
and all three of them were going up. So that provided me with more confirmation that, yeah, this is the right trade to enter. Okay, something just happened. University of Michigan sediment report just came out. Lower than forecast. I forgot that was coming out this morning. I'm looking at puts. Okay. This time, if we get below the weekly high, right, then we've got an opportunity to come all the way back down to this primary fib. Right? So,
Yeah.
So what would I do? What do you think I would do, Roy?
I guess, like you said, the puts.
Yeah, but why would I enter this trade? What are the conditions that I would enter the trade with, given the explanation that I gave you for entering calls? Why would I enter puts if it reaches this and confirms? So go through those steps with me.
So I guess you'd look at the momentum.
Yes.
The ticks.
Yeah, I would want to see red bars on the ticks.
And on the 5-minute chart, I forget the name of that.
It's called DMI, direction of an indicator, and the red line here should be going up.
Okay.
Right? Not down. You would think that it would be down, but it's not down. It would be going up. Okay. Giving it strength. This DMI is really a strength indicator. Right?
Okay.
And so while I expected this thing to come down based on the new information that we just got, the consumer confidence report not meeting forecast, I would have expected the market to continue down, and it may very well, but it looks like it's taking its time. Okay.
So when you do the naked, the weekly high is not a particular indicator, right? So I've not heard it mentioned. So
right. So the weekly high is another indication that
does it have something to do with the sentiment, the weekly high?
No, it has nothing to do with the sentiment. It has to do where the highest point during that week that the market reached.
Okay.
Okay. So we busted through the weekly high during the last trade, making a new high for the week. Certainly not the all-time high, but it's going in the right direction. So now it's coming down to the weekly high. If it breaks through the weekly high, right? We just finished. We have a new bar right now. Okay, we're only a minute 57 seconds. I mean, basically 10 seconds into this bar. It's going through.
Okay.
The way that I teach you guys is to let this bar complete, right?
Yeah.
So I'm moving down the entry location, right?
Yeah.
We don't have 5 points. We only have 4 from there, right? We want to get below this pivot here, right?
Yeah.
Think about your pivots, right? Through the week, okay? So we busted through the weekly high during the last trade, making a new high for the week. Certainly not the all-time high, but it's going in the right direction. So now it's coming down to the weekly high. If it breaks through the weekly high, right? We just finished. We have a new bar right now. Okay, we're only a minute 57 seconds. I mean, basically 10 seconds into this bar. It's going through.
Okay.
The way that I teach you guys is to let this bar complete. Right?
Yeah.
So I'm moving down the entry location, right?
Yeah.
We don't have 5 points. We only have 4 from there, right? We want to get below this pivot here, right?
Yeah.
Think about your pivots, right? So we want to get below that area. We want that bar to finish below the area, create a new bar, and keep going in the same direction.
Okay.
Right? When that bar completes and the new bar forms, is when I teach you to enter the trade. Now, I may enter it more sooner than that. Right? Depending on what I'm seeing on the chart, because one of the things you'll learn is that price action trumps everything you see on the chart.
Okay.
Right? Yeah. But the way I teach you is because I want you to be more conservative and more successful. I teach you to wait for confirmation. Now we have 8 seconds left for this bar to complete. We also call it the paint, right? It's finished painting, and we're going the other direction, so there's no confirmation here. And in fact, we now have the morning range established, so I wouldn't actually get in until after it goes through the middle of this opening range, which only gives us 3 points now to the primary fib. So now I'm moving this down because I'm going to play the edges, because I want at least 5 points. I'll take 4.5, but I really would like to have 5 points of clearance between where I'm getting in and where my first target is.
So, Mitch, what do you mean by playing the edges?
Playing the edges of the market means that, for example, I would wait till it gets through all of this stuff because we just don't have enough room.
Okay.
Right?
Mm-hmm.
From here to here is only, let's see, it's 58 to 54. What do you think? Really only 3.5 points. Now, can you make money in 3.5 points? Sure you can. But are you gonna make enough money to actually justify entering the trade? Don't think so. Right?
Yeah.
That's why we want 5 points. We have a better than 50% chance of winning if we have nothing in our way to stop us. Right?
Yeah.
Like, for example, if we go here above the 8 and above the previous weekly high and confirm, I would take that. That's another 8 points. That's 8.5 points almost. 8.29. $8.29 of pure, well, $7.98 before we have something in the way. There's absolutely nothing in the way if we were to go up and confirm. Going up. Coming down, there's a lot of stuff in the way. There's pivots in the way. There's the middle of the opening range. Then we've got the primary fib. Then we've got, the primary, the major support and resistance area at 59.50, right? So there's a lot of stuff in the way to really make it worth our while to get in. There's nothing that says it won't come down, hit this primary fib location, right? This red line here.
Yeah.
And just bounce off and turn around and then stun. Because now you're in a non-winning trade. And if you weren't able, if the bar's moving quickly and came, bolted on down and then all of a sudden turned around, you may not be able to get out of that trade before you're in a loss situation. So you've gone from a positive situation, right? Positive earnings to negative earnings. Oh, see there? So now we definitely don't have enough room. And so now I'm going to come down here. And that's yesterday's close. So we know that's a strong level. See what I was talking about, coming down,
yeah,
through, and immediately turning around, right? I just saved a lot of people money. Right?
Yes, it did.
Now let's look at momentum right here. Momentum was coming down, right?
Yeah.
We could have gotten in here, but it could have just bounced and gone the other way. Momentum's coming down. On this bar, it actually broke.
One last question: those dots there that you see, what do they indicate?
They indicate the high, middle, and low of the morning range.
Okay. Oh,
right?
So this is the middle. Okay. I get it. Okay.
And the morning range is established from 9:30 to 10. So it's the first half hour of the market. And why is that important? Probably is your next question, right?
Yeah.
Yeah, because it will tell us whether or not the market is just kind of going to channel all day long within that range, right? If it breaks out of that range, we have a much better chance of winning trades than if we're playing within the range. The other thing that it tells us is whether or not we have enough room from the middle to the top.
Okay.
Right? And that point is 13 and a quarter points, and 13 and a quarter points down. But because we have all the other indicators in the way, there's nothing really to play until we actually get above the middle range, above the weekly high, because we don't have 5 points from the middle. Oh, we do actually. I think we do. Hold on a minute. Well, not quite. Just about 5 points, right? From the middle.
Mm-hmm.
But we have pivots in the way that could stop us. So we wouldn't actually do anything until we get past this pivot here. You see it?
Mm-hmm.
Right? And then we've got about 7.5 points to the top of the opening range, and then another half a point or so to the daily high, which ultimately would be the first target is the top of the opening range. Second target would be the daily high, just another 50 cents or so above it.
Okay.
In this case, we've got $4.72. So I would consider doing that. Right? It's not $5, but okay, I would consider that. Right? And so if we got in here and we confirmed, we went through yesterday's close, confirmed on the next candle, and still had the $4.50 available to us, right?
Yeah.
And I would consider entering puts. And I would, if it's less than $5, I would treat it as a scalp, which means for you, it would mean taking all your contracts off at the same time.
Okay.
For me, it would be, taking partial profit, partial profit. But when I think of a scalp, I'm thinking of a scalp that immediately just drops, and you get that big candle, that big burst of energy.
Uh-huh.
Right? And I would take almost 90% of my contracts off the table instead of 75%.
Okay.
Okay. Leaving me with only 10, and if it goes further, I can add. Let's say it gets down here, right? It gets down here, goes through the 8-day EMA from the hourly chart, which is which is at 59.43. Let's say it gets through there. If that's the case, and we had another more than 5 points to go, I would probably have taken profit here.
Mm-hmm.
Let's say I take 90% because it's only, it's less than 5 points,
Mm-hmm.
right? Breaks through, I would probably start adding contracts
Okay.
here, right? Because I would have 10 left. And if I added another 50, that gives me 60, and then follow through on the 75%. Taking out 75% of those new contracts and adding to and then, following my legging out procedures.
Okay. Mm-hmm.
Okay?
Yep.
And all of this comes from rules that you will learn in the new course.
Okay. So in general, can we conclude anything from a large range for the morning versus a smaller one?
Yeah. So a large range for the morning means that you could actually trade the range-bound trades, right? But if you have a small range, let's say it's 8 points, you never quite get to 5 points.
Okay.
Right?
Mm-hmm.
And so really all of that is just consolidation.
Okay.
If you have a wider range, then you have, 5 or 6, 7, 8 points between the high, the middle, and the low.
Okay.
And if nothing else is in the way, then you can trade, you're able to trade that range. You could trade it all day long and just play each reversal.
Okay.
Up and down.
Mm-hmm.
Right?
Mm-hmm.
But you want to be very wary of that. Trade, you're able to trade that range. You could trade it all day long and just play each reversal.
Okay. Mm-hmm.
Up and down.
Mm-hmm.
Right?
Mm-hmm.
But you want to be very wary of that.